All right. Good morning, Helaine. How's it going?
Morning. Good. How are you doing, Blane?
Good, good, doing well. Excited to be here for today's edition of Trade of the Day Live here on this Thursday. A lot happening in the markets out there, per usual. Really excited to be here live with you, breaking it all down for our folks watching at home. So, welcome in, everybody. Please excuse Helaine and I both. We both have a little bit of the flu bug right now, so bear with us. Call for some sniffles along the way,
Yeah,
but we're excited to be here with you all. So, let me go ahead and take over the screen share here
go for it,
while
Blane.
we're getting things set up. I know folks are still popping in the room here while we're getting going. Um, but yeah, Helene, like we said, there is clearly a lot happening in the markets right now.
Oh, yeah.
Having rally across the board, and what we want to talk about today is clearly what's moving price action right now, what's driving stock prices higher. As I'm sure
hmm
a lot of you saw, we have new all-time highs on several of the major indexes. So we're going to talk about what's driving that right now. We're going to take just a quick overview of the S&P 500, one of those major indexes, of course. I'm going to talk about just some of the internals under the surface, just kind of lifting up the hood, seeing what's going on under the market, seeing some really encouraging things there. And then, of course, per usual, Helaine and I both have a really great trade idea of given everything that's going on in the markets, how we'd be looking to play it today. So Helaine, let's go ahead and hop into our first topic we want to talk about today. And this is not a chart that we frequently look at, but this is clearly what has been driving a lot of price action, sending stock
hmm
prices moving higher, pushing, the indexes to new all-time highs and seeing a lot of different pockets of the market begin to work that, were really kind of laggards, really slow, just kind of stuck in the mud at the beginning of the year. We're seeing a lot more of the interest rate sensitive pockets of the market starting to rally, and it's because of
hmm
what's happening in this chart right here, connected to the Fed rate cut story that's really powering this. Do you want to talk about what's going on in this chart right here and what this means?
Sure. I mean, as we can see, rates are declining, and as you had said, we had been looking for a while for a new reason to trade higher. The market runs off of storylines. What is going to be that next storyline to push us the next leg higher? And right now it is rate cuts. So as the yield drops, and we have more likelihood for rate cuts, we are seeing some of those different stocks and different sectors start to rally.
Exactly right. Yes. I mean, of course, what we're looking at right here, this is a chart of the 10-year U.S. Treasury yield. So, of course, this is very important to folks that are, bond market investors. That's not what we're exactly looking at here, but this has a high correlation on the trajectory of stock prices, particularly when you get, a long, trend forming in this line. So, of course, you start seeing rates drop. Historically, that's been very supportive for equity prices, stock prices across the board, particularly those areas of the market that are more interest rate sensitive. So you're talking about the more, consumer cyclical discretionary names, things like, the home builders, anything related to the housing market. Even talking about, a lot of different retailers out there, anything in that type of basket of stocks very interest rate sensitive. So you typically start to see a lot of outperformance in that area of the market, even small caps too. You throw in small caps just as kind of a whole basket as well. You start seeing those areas start really outperform. Heading into and throughout a rate cutting cycle because it's alleviating one of their biggest pain points. So you clearly can see this line trending down. This is looking over the past year, so you can see it. The current level we're just minuscule bit above 4% on the 10-year U.S. Treasury yield. That's a really big line in the sand. You can clearly see, looking back Lane to April,
Mhm.
right in the midst of the big equity market sell-off we had then too. Of course, people were piling into bonds. They were, flying to that safety trade,
Yeah.
and so you can see we had, a big dip there. But the close was again, it was just a touch below 4%. So we did actually intraday today, just marginally, just by a couple thousandths of a point, drop down below 4%. Now, if we get a close below 4% and we close, with a three handle on the 10-year U.S. Treasury yield, I think that's going to be massively supportive for stock prices, just adding more fuel to that fire. That's the bullish narrative surrounding this current rate cut rally. So really encouraging what we're seeing here, seeing this U.S. Treasury yield begin to trend down. That is just that's great news for stock prices. So Anything else you want to cover here, Helene, before we hop into the S&P chart?
No, I think we touched on all the topics there.
Perfect. Awesome. So here we have, of course, this is looking about 5 months of the past, trading activity, just at the index level, S&P 500. Helene and I, we both were talking about, even though over the past roughly month and a half, we were just kind of marginally checking off new all-time highs. It was really just by a couple points here or there every time, throughout roughly, the end of July through just up until a couple days ago, really it was just marginally breaking out just by a few points of these new highs. It was staying in a fairly tightly compressed range,
Mm-hmm.
roughly, between 6,500 and 6,400. That was, really where stock prices have been kind of locked into that range for quite some time. Still showing some constructive activity. It wasn't, making any new lower lows, but, again, wasn't really breaking out to the upside either. But of course, this week as we had some fresh data come in. We got the PPI report yesterday that came in significantly cooler than was expected, and then today, we had an inline report for CPI. So you're starting to stack up these data points that are just confirming what the market was already suspecting. For rate cuts next week at next week's Fed meeting. You know,
Mm-hmm.
heading into the week, we had the markets were pricing in a 100% probability for a rate cut next week. The question was really what the size of it was going to be and whether there were going to be consecutive rate cuts following that. Now, with the developments of this week, with the two inflation data points that we've gotten this week, we've actually started to see the probabilities of a larger rate cut next week begin to tick up. So, the market's again pricing in a 100% odds of a cut. But a week ago we were standing at a 0% chance of a 50 basis point cut. So a double rate cut next week. That's now almost at about 12%. So again, still fairly low odds, but you can see it's starting to increase. And obviously, projecting out to the remaining Fed meetings the rest of the year, we're also seeing the odds of rate cuts there. The market's starting to price in that we're going to get three consecutive rate cuts to close out the year, which again, of course, that's going to be very supportive for those very interest rate sensitive pockets of the market. So, that's propelled the indexes broadly. This is just looking at the S&P, of course, but like we said, the S&P, the Nasdaq, the Russell 2000 small cap index, whichever one you're looking at, even the Dow too, I think finally broke out to another new high today. You're finally seeing some reacceleration to the upside with a more clearly defined breakout, like you can see in the past 2 days worth of trading. So that's really, really encouraging. The trend line buys are still intact here, Helaine, but I
Mm-hmm.
would say that really encouraging action here, but there's probably somewhat of a sign of caution, just at least at the index level here. Do you want to talk about that, Helaine?
Sure. I mean, yeah, as you said, we were in a pretty tight range for quite a while, which we needed to be, if not having some sort of decline because of that run up after that April low. So it made a lot of sense to have that pause. And now, really in the short term, right now we're red hot. We're overbought for the index level for the S&P. As you can see, it's currently above that upper Keltner channel, and we would expect, although the index can trade above the upper Keltner channel for a prolonged period of time. We all know that. We've
Which we've
seen
seen a
that.
lot this year.
Yeah, we've seen a lot this year. But we start being a little bit more conservative with our bullish picks when the index becomes overheated because we know there's a higher likelihood of a pullback in the short term. So, just being a little cautious there, that's for sure.
Yep, exactly. Yeah, because you can clearly see, with today's price action on the S&P, it's, we're trading outside of the upper counter channel band. Not that we've been up there for any, sustained period of time. And as we said, that can persist for much longer than just today. It doesn't mean just because you pop out for one day, you're going to pull back immediately the next day. That's not what that means. It just, means you're getting a little further extended away from the median. And, it just warrants, maybe a second thought when looking at, long-term, bullish positioning.
Yep.
You may have an opportunity for a little bit better pricing. So that's all I think we want to cover there. And then
Hmm.
next chart here, Helaine, this is a really nice indication of, kind of lifting up the hood of the market, seeing what's going on in those market internals. You want to go ahead and explain to the folks what's going on in this chart and why we love what we're seeing right here.
Yeah, so the advanced decline line shows you a comparison of the stocks that are advancing versus declining. The name really explains it. And so when more stocks are advancing, we're going to see this line start to tick up. And when more stocks are declining, we're going to see that line tick down. So we want to see this line increasing. We want to see that trend going higher. And that tells us that the breadth of the bull trend is widening. So it's a very bullish sign when we see this increase like we're seeing today.
Exactly right. So we're seeing that good breadth in the market. You're seeing that really broad participation because again, this line right here, this is talking about all issues, so all stocks, equities, ETFs, whatever you want to talk about that are trading, through the NYSE. So this is talking about everything trading through the NYSE, and because of that, I mean, you see this line trending up. That is a very, very strong indication of broad bullish participation. You look at just the advanced decline line specifically to the S&P 500 stocks too. You see the same thing replicated. That one was, again, tracking a bit more so, with the price action of the index, was kind of stuck in neutral. It was, going up and, kind of hitting its head on resistance level for a little bit. It was kind of, hovering near those all-time highs. But finally, again, in the past couple of days, we've seen, a nice bullish push higher. And, that's being replicated again in the advanced decline line for the S&P 500 index. So that's really encouraging to see that. The Helaine also too, the S&P 500 equal weight index is at a new all-time high today.
Very
It
bullish.
currently closing at, if it were to close at current prices, that would be a new all-time closing high for the equal weighted S&P 500 index. So that's again a really, really strong, internal signal to the market that you have really strong breadth and wide bullish participation across the board. So I think that's all we're going to share here. So I think, Helaine, it's a good time for us to go ahead and hop into our trade opportunities for today.
Sounds
And I'll go
great.
ahead and do mine first. And this is kind of tying things back to how we started today's presentation, talking about what's really fueling this latest leg of the bull market rally we're seeing right now. And it's rate cuts. That's what the market's focused on right now. We're in one of those bad news is good news scenarios because the bad news is confirming that rate cuts are on the way. That's what the market's focused on. It's hungry for rate cuts. It seems like they're coming next week. Looks like the market's going to get exactly what it's been asking for. And that's why I'm looking at this play right here. So this is obviously one of these sectors in the market, pockets of the market that's very interest rate sensitive. So this is the XHB ETF. This is the Spider S&P Home Builders ETF. So this is an ETF that focuses on a basket of stocks that are either directly home builders or companies that are, retailers or suppliers, of, key products and inputs that go into the home building process. So this is a very targeted, very specific play focused on the home building industry. And, again, you can see this ETF began to rally, in the back half of June throughout July. It really started to pick up steam, making some nice higher highs and higher lows. This is all as this rate cut rally. The market was starting to sniff out that rate cuts were likely on the way. And of course, we got the confirmation in Jackson Hole, and ever since then, there's been several different things that have just further confirmed that these are on the way, and it's going to be massively, productive and a massive tailwind for these types of stocks that make up this basket that this ETF is focused on. So you can see today, earlier in the week, we did mention, Helaine, too, that a lot of these interest rate sensitive plays had run a lot, and a lot of
Mm-hmm.
a little overbought, a little overextended, and still had our eye on them, but we're waiting for them to
Yeah.
come in just a little bit. So you can see in the past couple of days, after XHB made some new shorter term higher highs right here, it did pulled back down to roughly our middle counter channel, made a new higher low. And now, of course, in today's trading, having a nice move higher. It's up about 2.5%, and looks like it's certainly ready and poised to go ahead and challenge those new recent highs that it made just earlier this week and probably break out and make some new highs over the next couple weeks. So really strong price action we're seeing from XHB right here. The trend lines are well intact. We see a 21-day EMA. So red line's trading above our 63-day EMA down here. So great looking trend line buy signal right there. See the crossover happened. It looks like it was actually the very last trading day or very first trading day of July. So either the last day of June or first day of July. But see, that's where our crossover happened right there. And again, this ETF is trading within the counter channel bands. That's offering a really attractive entry point. That's confirmed down here in our short-term RSI too. See the RSI, it's below the level of 70, but it's increasing. So that's signaling this ETF has really strong momentum. but it's not quite overbought at current prices. So this is a really, really appealing setup for a directional bullish trade. It itself is not overbought, has a great tailwind behind it. And so, Helene, I landed on this trade right here. It's for
Okay.
XHB. Going to look to try and play this one with a directional, just a straight call option purchase.
I
So
like it.
on the October 3rd, and specifically the 112 strike call, which you can see is
Okay.
currently coming in just a touch under 800 points. So I'm actually going to go ahead and place this trade right here. Just going to do one contract. Going to go ahead and put my order in at the midpoint price for this option. It's coming in at 7.95 points. Just going to do a day order right here, see if I can get it filled. I feel like I probably will. But that is how I was going to go ahead and play what's going on in the market today.
Well, I love that trade, Blaine. I know I just am thinking back a couple weeks ago where you and I were looking at trades and looking at opportunities as we started to see rotation, and we said, "Hey, it looks like home builders are really starting to tick higher. I think this is something that we're gonna have to keep a closer eye on." And since then we've looked for different opportunities and gotten in at different places. But today looks like a great entry for XHB in that call option purchase. So I love the trade.
Absolutely. Yeah, I appreciate it. I totally agree. I thought it was a great looking setup. And, it's like you said, we've had our eye on this for quite some time
Oh
and
yeah.
just a great opportunity being offered by the price action today. So I was excited to spot that setup, but also equally as excited to see what you have.
Yeah, well, I'm gonna go ahead and jump in. I'm gonna share my screen 1 second here. And I first wanted to show you guys because as you know, we take most of the trades that we share with you guys, if we have enough cash in our account to jump into it with you all, we go ahead and jump into the trades. And so I was looking at my account before this call and I noticed that my Ulta trade had reached a full profit potential. Blaine, can you see the Ulta chart?
I can, yeah. Yep,
Okay,
I can
wonderful.
see it.
Okay, good. So, earlier, or I guess it'd be late August, we had our trade of the day live, and I said that Ulta looked amazing. I loved it. Now, given the cost of the stock and also the upcoming earnings, I said that I wanted to play it a little bit safe and do a call option debit spread on Ulta. I did the September 19th, and it was the 475, 485. As you can see, I entered that, yep, as I said, August 19th. It was trading at 760 at the time. Right now it's at 1010. I would expect to be filled closer to 10 because it is a 10-point spread. The most it can ever be worth is 10 points. So I'm going to look to exit this trade. I'm probably going to go with 995 as my exit price to ensure it gets filled. But I just want to highlight this because as you can see, Ulta had earnings, and we saw a pretty big downswing with that earnings. But as I had said when I had shared this trade with everyone, the debit spread provides downside protection, so you can ride out an earnings pullback and still profit. And as you can see, today I'm still at that full profit potential, even with that big swing for Ulta's earnings. So I'm gonna wanted to follow up with this trade and let you guys know that I'm looking to exit this trade now, and potentially even roll it over, just depending how the options look. But definitely looking to exit out this win.
Yeah, no, it's a great looking trade, Lane, and
Thanks.
great call on that one. You clearly spotted a good setup, and it's worked out exactly as you planned. So great job
I
on it.
appreciate it. And now I'm going to go ahead and go over the actionable trade with you guys for today. And I'm looking at Palantir Technologies Inc., symbol PLTR. As many of you know, Palantir has been a leader in the market this year. It's done so well that people almost wanted it to fail, when you have those stocks. And as you can see, the trend's been great. It's trading above a number of key moving averages that we look for to confirm a bull trend and a buy signal. Specifically, I'm looking at that 35-day EMA and the 200-day moving average. And it's trading above both of those right now. That confirms the buy signal for the trade. And the reason why I'm interested in this, as you can see, is overbought earlier in August and then had this sharp pullback and correction because it had run really high, really hot for a really long time. And what we saw since then, it was about a month-long consolidation. And consolidations, they're natural, they happen, they take some time to work out. But they're good to keep an eye on because typically a stock's either going to trade lower out of it or trade higher out of it. And right now we're seeing confirmation that Palantir is trading higher out of it. Oftentimes after consolidation, if they start trading higher, they'll continue higher from there. Now, as a fan favorite in the AI sector and this momentum sector as well, I'm looking to enter into a trade for Palantir to ride this leg higher. Specifically, I'm going to look at a debit spread. I'm looking at the November 130, 140 strike call option spread. It's trading around 770. So as long as I get in at 8 or lower, I'll have at least a 25% profit potential on the trade. I'm also going to have a good amount of downside protection on this trade as well. As you can see, the break even is going to be 137.75-ish. So looking at the chart, 137.75 all the way down there. That means that we could see Palantir decrease in value from here, stay flat, or increase, and we could still experience that full profit potential. As you also know, it's a pretty volatile time of the year historically, so it gives me some wiggle room in case things were to turn over. I could ride out a correction for a good amount of time. So I'm gonna go ahead. I'm gonna enter into that trade right now on the November 21st one, 3140 strike spread. And that price is really jumping around, which is normal, it happens. But let's see, it looks like it's right around 773. So I'm gonna use 775 to ensure, hopefully, that I get filled quickly. Um, it's halfway between the bid and the ask. We use a limit order, and there you go. I'm filled on that, and I'm all set.
That's awesome, Helene. That trade looks, that's just another great looking trade.
Hey,
Just looking at Palantir's chart there, I mean, it's clear, like you said, the stock, was just, I think it was the best year-to-date performer in the S&P 500 index,
yes.
through much of that rally. Like you said, it, pulled back. It just, got it up into nosebleed territory,
Yeah.
which for anybody long the stock, I mean, hey, that's great, right? I mean,
Mhm.
congratulations. But, it pulled back, really consolidated. It was clearly building a base there. It was not dropping below. I can't remember the price there, but just looking at the levels, consolidating, buyers were coming in,
Mhm.
supporting the stock at that price. Now starting to break out. Looks
Yeah.
like one heck of a trade opportunity you spotted there. So, and again, way to go, Helene. Looks like a good
Thanks.
one.
Thanks, Blaine.
Um, we did have a question in the chat from Thomas. I did want to answer this live. So,
Sorry.
Thomas, you were asking where the recordings posted for these sessions. So, everybody, if you're watching at home, if you did not realize, we do have these Trade Day live sessions. They are recorded. Of course, we always love to have you here live in the room with us. We love getting to interact. Love having you be here. Of course, we're sharing these trade ideas very timely in the market, so you're seeing them here. But we do record the session. Of course, we understand not everybody can be here in the room live with us, every single Tuesday and Thursday,
Yeah.
sit down for 30 minutes. We're very aware of that. So we do want to make sure you have an opportunity to view it later. So they are available. One, if you're, if you're subscribed to our Trade of the Day newsletter, we do send out a replay email with these later on the evening. It takes a little time to scrub the video up, get it edited, things like that. But we send them out as a replay email, but you can also find them online. We'll have a post on there. It's on our TradeWinsDaily.com website. So you can go on there. You can see all of the TOD live replay videos, in
Mhm.
addition to all the Trade of the Day newsletters. So it's all posted there. So if you want to check out the replays, those are the two best places to go find it. And also, I did post in the chat to everybody. I sent this link to everyone. Actually, next week, starting on Monday, we have a really exciting presentation that myself, Chuck, and our team and a special guest are going to be sitting down talking about a brand new trading group. It's called the Six Figure Signals Group that our team is going to be starting. It's a really exciting opportunity, really exciting event to be sitting down talking about this. I don't want to bury the lead and say too much about this here, but if you go ahead and click that link, you can actually go ahead and sign up to attend. It's absolutely free to attend the session. Would love to have you there. You're going to be talking about some really exciting things. I think you'll really enjoy the presentation. So, wanted to make sure, if for you all out there watching, our loyal TOD Live subscribers wanted to get that in your hands as soon as possible. Would love to give you guys the first shot at getting signed up for it. Should be a great presentation next week. So that's what that link is in there. And I see we have another question too, Helaine, from
Yes.
Jim. He's saying if the advanced
Ew.
decline line is still very bullish, but S&P 500 is above the upper counter channel,
Hmm.
how would you trade things with these mixed signals? So,
So
Helaine, you want to take that one?
yeah, definitely. So, Jim, that's a great question because as you had, if you had heard us earlier, if you were on in the beginning, we're like, okay, we're going to be a little bit more conservative with our plays, knowing that the S&P is currently overbought. But as you noted, the advanced decline is saying things are very bullish still. So, keeping that in mind, what we're going to be looking for are stocks that are not currently overbought, but maybe are seeing rotation into them or have just been laggards compared to other momentum stocks because, as we had noted in previous TOD lives, we saw a strong rotation out of certain stocks and into other stocks, like the home builders that Blane had pointed out today. So, we're keeping our eye on those sectors and stocks that are not currently overbought and clearly have more room to run. In this bull trend, but also, keeping in mind that we could see a pullback and that is natural, that's okay, but we want to just be making sure that we're finding stocks and sectors that are not in nosebleed territory as well, but are instead in strong bullish trends, but just not currently frothy.
Yep,
Like anything
exactly
to
right. Yeah,
add to that?
we just like to, we like to check those, market internal signals like the advanced decline lines, things like that, just to kind of see, like, sometimes you can have a really, really narrow rally where there's only, certain, a small basket of stocks that are really heavily weighted that are pushing the indexes higher. So it's a little deceptive. You see the index printing new all-time highs day after day after day, but there's only about, 10 or 20 stocks that are actually pushing that higher. We've seen that on several occasions over the past couple of years, of course. With a lot of the mega cap tech stocks, there's been several occasions where they've kind of ripped higher and led the
Mhm.
market. There's not a lot else working. A lot else is just, all the other pockets of the market are really lagging behind. They're not participating, but you're still getting new all-time highs. So if you're, just invested in the index, you're like, okay, great. Or if you're in those stocks that are working, then obviously you're really happy. But if you're in the pockets of the market that are, on the other end of that, they're hitting 52-week lows or just kind of stuck in the mud consolidating. Those are obviously are not participating. So that's why it's important to see those market internals starting to confirm, you're seeing new all-time highs, new 52-week highs on the indexes, but you're also getting confirmation from those market internals, whether it's an advanced decline line or seeing an equally weighted index rally and make new high, all-time highs. Those are great confirmations that you're seeing very broad-based participation across the board. So even at the index level, you're overbought. It's still very encouraging to see that confirmation just for a long-term trajectory of stocks and just to know that there's a lot of different pockets of opportunity out there in the market.
Absolutely.
Yep, absolutely. And looks like Jim asked one more question. Helaine, he said, thanks. And do you always have a stop loss? It's sometimes you highlight stop loss, but other times there's no stop mentioned. In the current circumstances, would you use a stop for these? So good, great question, Jim. Helaine, do you want to talk about this one too?
Yeah, so this just depends on the type of trade that we're taking, what our stop loss is going to be, and our cost basis as well. But with these initial entries, for both the directional call option purchases and call option debit spreads, we have a mental stop loss. We are looking to potentially exit a losing trade if we have a 25% loss, and we definitely want to be out of that trade at a 35% loss. This helps us to limit our losses and to avoid having just one big loss wipe out our account or our wins. So we definitely like to make sure that we are using stop losses to limit losses wherever we can.
Yep, exactly. Yeah, we use them as you said, Helene, as a part of our just broader trade management and
Hmm.
risk management within our trading. So
Exactly.
that looks like all the questions there. I got Thomas. I got your email, so thanks for sending that over. I'll make sure to get you added onto the TOD list since you're not receiving those emails. But again, thank you everybody so much for being here live. Really appreciate you being here in the room with us. Hope you enjoyed today's session. I know Helene and I, we always love it,
We
even though
do.
we're a little under the weather today.
Yeah.
Uh, I appreciate you bearing with us and the scratchy throat talking. So uh, we're hanging in there. We're keeping Dayquil and the cough drop business their bottom line is going to be looking pretty good because of us. So
Yeah, the market stays open even when we're sick. So we're happy we
that's
can
right.
be
That's
here
right.
all with you all
But thank
today.
you guys so much for being here live with us. Hope you enjoyed today's session. Hope you all have a fantastic weekend, and we'll be seeing you back here live on Tuesday, breaking it all down in advance of the Fed meeting. Next week is surely going to be filled with a lot of fireworks for stocks. I'm anticipating. So looking forward to seeing you all back here soon.
We'll see you then, guys. Have a good
Yep.
weekend.
Take care, everybody.